president said on the campaign trail last year that it was 10% for everybody but China at 60. Those are the numbers that I'm kind of working with that we ultimately go back to, at least maybe as terms of statutory numbers. But as your point, blended rates will probably be a lot less. There'll be carve-outs, there'll be some exemptions. That's what I'm guessing. This is Joe
I
Livornia
haven't seen
guessing
that
it.
study.
Yes.
You're encyclopedic at this. Where's your efficacious blended tariff rate?
For non-China, my guess, and this is a wide confidence interval, is under 10%. Because if you look at what the administration wants to do, it wants to reindustrialize, raise some revenues. China's a peer competitor and a strategic adversary. So everything that's being done is really as it relates to China. So there will be some tariffs on our trading partners for unfair trade practices, but as the reduction to 10% minimum, assuming there was reciprocity, that's kind of what I think we need to work off of. 10% is the number, and then again, I'm guessing because of what's already happened with some announced carve-outs and exceptions, it'll be lower. But I don't know, Tom, what it is.
You don't have a number.
I don't know what it is. And China's will be much higher, and if it goes from 145 down to 60, as the president alluded to before, I mean, it's still a very high number, but it may not feel as bad because the number is coming down from such a high point when the negotiations began.
What does that tariff level do to your GDP call?
I've been pretty optimistic on GDP, generally speaking. I mean, when I did the calculations of a 10% tariff on everybody but China, 60% on China, I got about a 9/10 increase, assuming no offsets in the dollar, just the pure math, of less than 1%. It was 9/10. And then the Fed had done a piece back in September 18 of 15% across the board, and they had basically the same number. What that would mean for GDP, I mean, initially, maybe it's a few tenths. Like, it's not a big number. The problem right now, the way I see it, is the market's worried about uncertainty, and it's very, very hard to quantify uncertainty. What's amazing is if you look at, this is just what the data show, if you look at the small business data, the correlation between uncertainty and real GDP was positive from about, late 80s up to about 2015. And now it's gone negative, but not by much. So the correlation is only about minus 0.2. So as much as we talk about uncertainty, it's probably overwrought and exaggerated. Like, this can't go on all year. And my working assumption is that the president is a great negotiator. He's going to get something done, and then and the economy is going to be okay.